Good afternoon, ladies and gentlemen. We are here this afternoon to discuss how the world of banking and finance will change 4 years from now. The general desire is that we will be able to hang the bankers. The bankers who caused the financial stress of 2008 and 9 will finally get rid of them. There'll be a new blockchain sunrise and fintechs will take over. The reality is, in 2017, as we speak, there are thousands of tech companies across the world changing the world of finance, banking, remittances, wealth management in different ways, in different impact-generating technologies. As we speak, in the UAE, digital banks are already emerging. Several large local banks have already launched their digital platforms. Remittances are a large part of the UAE economy. Al Fardan Exchange and UAE Exchange have already digitized that component as well. And as we look at the landscape globally, what we're seeing is it is the large, trusted, solid, stable global banks that are changing the world of finance by partnering and collaborating with technologies that augment their offering. It is not fintechs killing the banks. The bankers and the banks seem to understand fintech. They seem to understand that digitization is the way forward. Lending is also changing. Souk al-Mal lets you, at the touch of a button, compare lending options from across the market. Property Monitor is changing the world of real estate finance and is helping banks make better mortgage decisions at the touch of a button. The big question then is, how will the world of banking and finance look 4 years from now? There are some key trends, one of which is very sure, is that data will be everywhere. Financial data is everywhere. Digitization ensures that every time you buy a cup of coffee or you buy a Coca-Cola at Carrefour, the banks are noticing that. This data is being used across distributed shared ledgers, distributed blockchains, by large global banks. These are the banks that are already testing several blockchain applications in the real world of banking and finance. Another great trend is cashless economy. There's a lot of hype in the media around cashless economy. Cash is still the backbone, but the front end is already digitized. Countries like Sweden, Canada, India, China have taken great leaps forward in digitizing their whole economy. The UAE is also launching something called Emirates Digital Wallet sometime early next year with a product called Clip that will help us make mobile money, mobile wallets a reality in this market. Another key area is SME finance, corporate finance. Companies such as Beehive are changing the world of SME financing by introducing crowdfunding platforms, which are all led by digital technology. Trade finance is ripe for blockchain. Distributed ledgers between Dubai Customs, the importer, exporter, importers bank, exporters bank, importers shipping agent, exporters shipping agent, all sharing a distributed ledger would enable trade finance to be digitized and to be done in an instant. This is real world applications. These are banks actually working on real world trade finance applications on blockchain. Asset allocation is changing. 40 years back, Ray Dalio changed the world of fund management with algorithmic trading. Today, here in the UAE, Smart Crowd is hoping to change the world of real estate asset allocation with a crowdfunding platform regulated by the DFSA. So think about it. The regulators are also involved in how they can digitize the world of real estate finance for this market. And there's still stuff we don't know. We've spent the morning listening to Tanmay Bakshi. I did not understand half of what he said. It all sounded really cool. Facial recognition, Bitcoin, cryptocurrencies, data everywhere. Is that data good? Is that data not good? Can artificial intelligence harm us? Will robots take over? If we finally get rid of the bankers, and then we have a robo-banker, which Emirates NBD is trialing with robots in their DIFC branch, Emirates Stars. Will robots really be taking over? To answer some of these questions and discuss this with a panel of banking and tech people. I'd like to welcome on stage our panelists for the afternoon. So let's start with the ladies first. I think you've seen their photographs and their companies. Their profiles are available online in preference of time. Katharine, unbanked population. Everyone in the morning's been saying that digital technology is going to take over the world. Digital technology would help us reach the unbanked as well. What is your company, Now Money, doing about that?
Absolutely. So I think we've heard a lot about how in 2021 it's our target to become cashless. But still, in this country and across the Gulf, we've got 70% of the population relying entirely on cash. So until that issue is resolved, that is a bit of a pipe dream. Now Money, the company that I run, is an alternative banking solution for low-income people. We work with corporates in the Gulf that employ blue-collar workers. We give them all an account they can manage from a smartphone, be paid safely into, and also used to make transfers back to their families overseas.
And to get another beautiful woman on the panel as well, Irina, you're a lawyer, regulators. What are the regulators doing about this? Is this realistic? If digital money and digital cash, digital movement of cash, cryptocurrencies, ICOs, what is the regulator view?
Absolutely, and to add to Catherine's point, most of the people are unbanked. Most of the people don't have access to credit cards. Right now, I cannot transfer $10,000 dirhams to somebody in Australia for them to spend Australian dollars. But I can do that with blockchain. I can do it with blockchain technology. I can do it with Bitcoin. Was it possible 10 years ago? Absolutely not. Is Bitcoin regulated? Absolutely not. Is it possible to regulate it? Theoretically, if all of the governments of the world can get together, come up with some sort of regulatory system, but unfortunately we cannot do that with global warming, which is really affecting all of us. Will it be possible to do that with Bitcoin? I really doubt. In January this year, central bank came out with a new regulation stating that all the virtual currencies are not allowed. A month later, they confirmed that that excludes the virtual currency, that excludes the Bitcoin. And a month ago, they came out warning against investing in Bitcoin and warning against putting your assets in ICOs, et cetera, et cetera. Then we look at China. They decided to prohibit Bitcoin altogether, and they shut down all of the Bitcoin exchanges. Who bought some Bitcoin on the dip that followed that announcement from China? Anyone? I don't see a single. Oh, I can see two hands. I can see two hands in the back, 3 hands. Congratulations, that was a great move, because cryptocurrencies are here to stay. There's nothing we can do about it. Fadi Gandour was just a couple of weeks ago. That was one of his, my favorite statement. Cryptocurrencies are here to stay. We are to work with that. You cannot work against that.
So that's a good point about the regulators. Craig, Beehive, regulated.
Yes.
How much fun was it to get regulated?
We were talking to the regulators for about 2 years. So I think, to be fair to any regulator, a regulator needs to actually understand the business model and the various risks associated with that before they can possibly regulate. And it's not unusual. If you look at other parts of the world, you'll see a lot of different types of innovative models tried, and regulators tend to come up with, whether it's sandbox or some form of mechanism that allows them to not hamper innovation, because I think all countries in the world are trying to drive innovation. You only have to look at the Middle East, whether it's DFSA, DIFC, whether it's ADGM, whether it's Bahrain. You know, everybody is trying to drive innovation within their financial services, but you have to allow some risks to be taken. And you have to open a proper dialogue. That means that regulators and operators and other parties that are interested in that ecosystem have got a platform to discuss these things without prejudice, essentially. So we were obviously one of the first. We started talking with the regulators. We were very transparent in what we were trying to do. We were using best practices from other parts of the world, and then 2 years later we became regulated.
Jean-Luc? Innoopolis, and you do a lot of work around blockchain and AI.
Yeah.
How do you think SMEs can prepare and participate in that journey?
So if we look at the opportunities related to blockchain, I think just in a nutshell to repeat a bit what it is about. So blockchain is a distributed, secure, immutable way of logging business transactions. And that means that blockchain has a potential of impacting every single business. Now we see applications starting with the part purely related to the administrative work, meaning know your customer type of opportunities, where basically you can remove all the paperwork today. You know, when you register in a bank or an insurance or wherever, everybody's asking the same information that can be shared now. There's obviously all the opportunities related to payments, and because you create trust among untrusted parties, all these type of payment transactions where you require a man in the middle, they can be simplified. And I think even, you said it earlier, even banks are looking at that. Here in the region in particular, I think there's an opportunity that is not fully tapped into, and that is related to the economy. There's a lot of import, export, a lot of trade. So we look at a blockchain, it can be used to log transactions across companies that have different IT systems, and then basically sharing that information can allow for faster clearance of transactions, but also faster payments. And because of this, and because you can also implement smart contracts, this will provide also a lot of very important information for trade finance. And then probably the last two cases is related. One is related to capital markets, basically where you can simplify trading, and the last opportunity is related to loyalty programs, and we have a number of applications already around that. So plenty of applications for blockchain today, especially for SMEs.
So that's a good point you raised about smart contracts. If I can come back to Irina, are smart contracts enforceable?
My opinion, and I know I've voiced it every time I get asked about smart contracts, that smart contracts are neither smart nor they're contracts. What else can you expect from a lawyer? The reason, but there's some logic to my madness. Who's behind a contract? Who's there to enforce it? When we look at typical contracts, there is a regulator in the country, there is a court, there's a judge, there's a police that will come and take your fridge away if you don't pay for it. Smart contracts. Completely decentralized system. Who's there to enforce? And that's the benefit and the bane of the system as well. But then, who's responsible for the coding error when the smart contracts are not coded properly? Completely uncharted territory. Lots of lawyers are trying to come up with a way to grasp the current reality, but at the moment I don't think there are a lot of applications in simple transactions. But if you want to go further, ownership of property on smart contracts, I really do not know how it will be handled. So completely uncharted territory.
Completely uncharted, and Katharine, something you're doing is quite uncharted as well, and goes into where the liability sits. If a dirham is missing on a Now Money account with a laborer, who does he call? Who takes that ownership?
So we have our own call center support. So in terms of sorting out the problem, that would absolutely be our responsibility with a customer owner, and then it will be up to us to trace where that one dirham is missing from. Is it stolen from him? Is it money that he sent and forgot about? Is it a mistake that's been made by one of our partners?
Can they still complain to the UAE Central Bank about it?
They could do, but I think they'd probably get a faster response from us.
Right. Well, coming to old age technology, Ziad, you were involved in the first NFC phone.
Yes.
Decades back.
Yeah.
How do you see that evolution over the last 15 years? Is that accelerated? Everyone's showing these curves with hockey stick growth. Do you see technology now at sort of a cusp? Is financial technology riding on telecom rails the new future?
Okay, when we did the first NFC project with Vivotech in 2003, We started with a card, then with a mobile, 3310. I wish I brought it with me today to show it to everyone. But at that time, we thought that this is a solution, along with the wallet that we've built. Later on, it was acquired by MasterCard, the technology itself. But the reason we sold it is we've realized that this is not a solution, this is mainly as a gadget. So basically, today when I see banks are implementing these technology, I realize that they are implementing a legacy and they're not implementing a solution. If the solution today is about blockchain, with respect to what the guys said here, all of them, we don't have enough resources yet to implement blockchain. It took me 3 years to convince my management or my board to do the blockchain on Quisk, and finally I managed to convince them this year, and we've done it, and it cost us a fortune because to find resources to do the project itself was really rare. Later on, I've decided to be part of the Blockchain Academy, which is we're going to launch soon to basically train more people in the Middle East and around the world to code for blockchain and help lawyers and, and legal people understand more of how these smart contracts were conducted. But yes, I want to say one thing in short regarding the future of banking is I do hope that the banks don't decide on behalf of the consumer and the end user on what technology to use and open their APIs for fintech companies. I'm sure there are a few here with us to basically be exposed to their IP addresses and to offer the service and let the end users choose whatever they like to use. Most of the time, we see a lot of failures in the products that comes from banks, and the reason is simply because they decide on behalf of the end user. And I wrote a very nice article, said what a cup of coffee tells you about your bank and fintech environment. Okay. You know, I've been banking with the same bank for almost, I don't know, 20 years, and the bank still send me vouchers to a restaurant in Sharjah, though I use Costa, the one next to my office, every day. So they still don't know that I like Costa and still send me a voucher on somewhere else. So I really hope the banks would listen to this advice.
So banks are not usually good at listening. I've been a banker too long. And this morning when I was dressing up, my wife, Nilansha, stopped me from wearing a tie. So this is my first banking on-stage appearance without a tie and in sneakers. Thanks to K-Swiss, the sponsor who's provided most of us sneakers. But interestingly, of all the speakers we have today, there's one speaker who's chosen to wear a tie. So he is a banker.
Well, clearly our industry is not catching up to the trends.
So Waleed, in the world of banking, one of the coolest places to be is private equity. It's old school, big money, old money. Is that world ready for disruption?
Ready? No, but things are changing very rapidly. So from a traditional private equity standpoint, both the funding side of the business as well as the investing side of the business is seeing tremendous change. On the financing side, typically private equities went to what we're called as limited partners, who would put their money in a blind pool and trust the private equity firm to then make good, sound investment decisions and make above average return for them. So that side of the business is changing with or without technology, because private equity firms have not performed to that expectation. LPs have matured themselves. They want to get directly involved into the investments themselves. So you're seeing more and more co-investments, direct investments, and less blind pool investing. At the same time, the same LPs are very willing to allocate a greater percentage of their funds towards technology. So private equity firms on the funding side have to come to reality the fact that no more funds are available on the blind pool of investing in traditional industries. But at the same time, the same LPs are giving away money on the technology side. So the private equity firms are now making sure that the captive LPs that they've served for years are not going away to new businesses, Beehive, and they want to capture that. And as a response to that, more and more private equity type setups are entering into more angel investing and venture capital themselves or inorganically. I mean, ourselves as EII, we've recently taken a stake in Dubai Angel Investors, And we're looking to get into that space more and more. Less so because of the financial returns, but more so because there's a lot to be learned from that, because we have our bigger portfolios in traditional industries that are ripe for disruption. So why wait for somebody to disrupt when you yourself can get the intelligence firsthand and be at the forefront? And if there's an opportunity to buy them out rather than being wiped out yourself. So that's on the financing side of the business. On the investing side of the business, there's a new reality. I mean, the way you evaluate a company is completely changing, because the traditional models of looking at the market and the people and the management and the business model, sustainable competitive advantage are all good, but you are not able to predict if that will continue in the next year or the year after, because traditional, what we call defensive industries, are no longer safe anymore. So education, healthcare, these industries are being disrupted all the time. So it's very difficult to project the future 3, 4, 5 years down the road using a linear model when disruption can come from anywhere. The traditional barriers of entry are no longer relevant. So PEs need to think, and are thinking more innovatively, how to evaluate these companies, and also looking at different sectors which are more progressive than the traditional ones.
So that's a really good point you raised about how disruption can come from anywhere. And we know Beehive is primarily crowdfunding for debt. Do you see yourself expanding product lines?
I think, so first of all, because we're focused on the SME, we'll always look at products that we think will help the SME sector. That's primarily where we'll come from. But just picking up on some of the other points that people have been talking about, I think as you look over the next 2, 3 to 5 years, it's going to be particularly interesting in fintech. Fintech is such a wide-ranging term. Everything from a company that's selling software to a financial institution, all the way through to an operating business that uses technology to deliver something to an end user. And I think the smarter banks, the smarter financial institutions now are looking at how they can partner and how they can work with fintech organizations, predominantly because it goes to culture, it goes to DNA, it goes to the speed at which fintechs can try things out, pivot, fail, go again. And it's very difficult for a bank, and a bank's no different than any other large organization. It's just very difficult because of the hierarchy that you have and the need to involve lots of different people. You know, we're talking to a global bank in a particular other market. We had a call, we were expecting some information 2 weeks later. 2 weeks later you get the, yeah, we're putting a project team together at the moment, we're just looking for a project manager. You know, 2 weeks. We work in hours and days. You know, they're working in weeks and months and quarters.
Or quarters, yeah.
Yeah, so it's, and you know, that's I think the frustration that you get. But going back to one of the panelists, I think Ziad said it, which is, you know, you start to talk, you look at Europe with PSD2, which is opening the APIs. As soon as that happens in Europe, the rest of the world will have to follow. Because if the European consumer is benefiting from opening up the whole financial sector and making APIs available, it has to happen everywhere else. Almost regardless of what the countries want to do. If they want their consumers to benefit or their SMEs to benefit, it's going to be really, really interesting next couple of years as to how this maps out.
So Ziad, you were saying something?
Yes, actually, one of the most difficult parts today, or we've been facing as a fintech companies with banks, is the KYC. You know, banks, they were so harsh in probably when it comes to, especially in this part of the world, like BBVA, they were the first to outsource their core banking system. And here it's still been hard, but without them knowing or realizing, when they announced that there is Samsung Pay and there is Apple Pay, what they did is Apple Pay and Samsung Pay today, they have the whole KYC of the customers. They have his age, his name, his nationality, his mobile number, his credit card number, his debit card number, what's the balance was left in his bank account. So they have the whole information. So KYC is not a secret anymore. So capturing these information, I think today banks in the US, where they started of opening their APIs, I was at Money 2020 last month, and all the banks agreed to open their APIs for fintech company and stopped deciding on behalf of the customer what technology or what services they need to use. Because if banks focused on their core business and making money out of money, then things will be good in terms of the end user technology and the end user behavior or the new generation behavior. It's totally different than the old one.
Right. Thank you for that. Jean-Luc, if I can get your thoughts on old banking versus new banking.
Yeah, actually, I have the comment I want to make is pretty much about the approach to innovation and disruption, and in particular, I would say leveraging the data you have, whether it's a bank or whether it's as a new type of venture. The issue today is that I see banks do a lot of very fragmented initiatives, right? So my bank is one of the leading banks here in the country, and they have an awesome app. But the other day I got an automated call from the same bank putting me on hold to wait for an agent to be available to sell me a service that I don't need. Same bank has a bot that makes you go around in circle.
Yes.
So I think there's an issue, when you look at all these new type of services, to do it in a very isolated way and forgetting the different customer journeys and being consistent. And I think that is what the new companies are very good at. They're very much focused on solving certain pain points and really being coherent and consistent across the board.
Yeah, and I think what I'd just like to add to that is that if you think about a bank, the fintechs are only attacking the profit pools. We're not interested in the bank's loss leaders. Yes. So you've got to have sympathy. A bank will have a number of things that it will lose money on, such as a current account with nothing else. It loses money on that. It makes money then on lending or remittances or transfers, etc. So fintechs are only going to attack the profit pools, and therefore banks need to look at that and say, what's our core competency? What do we do well? And actually, who do we need to be working with to make sure that our lunch isn't eaten? And it's a hedge. It's a hedge because the fintechs will only attack.
So one of the things that the fintechs need is funding. And they usually go to people in suits with ties on.
Exactly.
Only that you're going to take your tie off.
I will if you want me to.
When you look at a fintech startup walks through the door and gives you this great idea about how they're going to disrupt one profit pool of a bank. Ask you for funding. When you decide on funding a fintech, what are the things that you look for as an investment house?
Sure. I mean, the evaluation criteria of any tech-related startup is similar in nature. It doesn't differentiate between a biotech or a fintech. I think for us, the first thing is the concept. Is there a problem that the concept is solving? And how big that problem is? Is it scalable? Is it relevant to the time? Is it of a regional nature, of a large nature? Because we like exponential growth. So we want something that is solving a problem that is relevant across the globe, not just for a particular city or a region, and not for that particular time. So that's the first layer. How is that concept? The second thing is the business model. So it's all about execution. And average ideas, when executed well, will give you good results, and good ideas, when not executed well, will fail. So the general value chain of any technology startup is that they start with data, they create algorithms to mine that data, and then they deploy strategies to make those algorithms profitable. So for us, it's very important that the business model is simple, it's clear, and it is scalable. The third thing, and I guess the most important thing in any tech startup, is the team behind it. And it's very different to how we evaluate teams in a private equity setting. In a private equity setting, we look at track record, incentives, experience. In the tech startup, including fintechs, experience is relevant. They need to be aware, but sometimes experience can actually be a barrier for you to disrupt that same industry. But what we look at is the drive, the hunger, and their ability to be resilient, and actually failures are welcome because they tell you how people can learn from them and pivot. So the concept, the execution, business model, and the team are the three main characteristics that we would evaluate.
Sure. Thank you. Katharine, we started with you, circling back to you. We've heard the fund talk about what they would look for. You've raised a few rounds of funding, and as a startup and talking to our SMEs, any of whom may either be serving a financial service institution or maybe a pure play fintech as well, what was your experience talking to the investors, and what would you advise SMEs on?
So I think we have a difficulty here for specialized startups such as fintech and other regulated industries in getting access to capital. And part of the problem is that your typical investors, your funds, your VCs, a lot of them here are generalists, so they don't necessarily understand banking, and unsurprisingly, they're quite afraid of it. If somebody asked me to invest in a football business, I would be clueless. I would never get comfortable enough with it in a few months to feel it was okay making that investment. Now, on the other hand, you've got banks who are terrified of fintechs coming in and sort of stealing their cash cows, as what Craig was referring to. So it seems very obvious to me, if I worked in a bank and I needed to innovate, I don't understand why innovation is any different from manufacturing ATMs, manufacturing debit cards, all of which banks outsource to specialists. The people who innovate well are the people who innovate because of necessity, startups. If I was a bank and I needed to innovate, I would be buying stakes in every high potential fintech I could find in the region, who would be testing what worked for me, and then guess what? The ones that worked would be an asset to the bank. So, I mean, that would be my advice to banks and to startups, is look to the specialists and partner. Doesn't have to be a fight.
Thank you. Jean-Luc?
One comment in general, which is a problem here with a startup ecosystem, I would say, is that people look at investment purely the monetary side, but where the big value comes, whether it's fintech or other areas, is access to customers, access to markets. And I think that is a part which is still going a bit slow, and where corporates can do much more actually to give access to all these startups.
Beehive's raised some funds as well. Craig, any inputs on what SMEs should do or shouldn't do when they meet?
Start early. I think, raising money is always tough. Right? I mean, it's great when you pick up the paper and see that this company's raised this or this company's raised that, but a lot of blood, sweat and tears will have gone into that before they're able to announce. I think the important thing is team is hugely important. Right? So it's very few of us here, very few of any of the fintech, pure tech, any kind of tech is it's applied innovation. Right? We haven't invented particle physics. Right? We haven't done anything like that, but what we're doing is we are taking technology, and it's all about the execution. It's all about, have we identified a market segment? Do we feel that we can bring value? And most importantly, do we think we can execute better than the next person? And that's typically what you're looking to do, because the opportunity here is as Kat was saying, and I completely agree. If I was a bank CEO, I would be hedging. Right? I would be hedging because I don't want the board coming to me in 2 years' time and saying, when you could have put $1 million into that, and now that thing's causing us to lose tens of millions of dollars, why didn't you just take a few bets? And you see that in other countries, right? You see that in other regions, because they know that, and if it doesn't work out, fine. They will spend that on an away day for half the management team. Yes. That's what they'll spend it on, right? So it's about understanding how you can actually invest.
This is the UAE exchange strategy, right? They're already investing. MR E25 is doing very similar work. Ziad, you were mentioning something similar as well.
Yes, actually, when we struggled in raising the first $5 million, and finally we managed to convince Art. It was not hard to convince him, because Art Semberg sold CyberSource to Visa for $2.2 billion. So when we went up to him and explained how Quisk work and what's the use of it, he was amazed. He immediately got it. So when it took us like 2 hours to convince him for $5 million. So it was nice.
Good 2 hours.
Yes, and and so far we have $35 million worth of investment. But if I like the Germans and Siemens Deutsche Bank. They had a sign once, and they wrote in it saying, "Ideas are capital, and the rest is money." So if in the fintech world, if you believe in your idea and you don't give up, you will be rewarded sooner or later. I think it's very obvious. They're trying hard. We're trying hard. Still, sometimes I say I just want to leave that business and move to somewhere else. But then, at the end of the day, you can't, because it's your baby, right? You started it from scratch. So
good points.
Yeah.
Irina, all of this sounds great. Someone walks up to us and says, great fintech, here's $10 million. Is the legal framework, is the SPV models in DIFC, ADGM, or Cayman, is that the right way to go for, let's say, two young entrepreneurs who just set up their company and a big man comes and says, here's $10 million? How do they structure this?
There's definitely no one system fits all or one template fits all. We'll need to have a look. What is it that you're doing? Which regulations apply? As you know, which countries are you in? Where do you want to go? What do you want to further do with your investments, or which markets are you trying to access? And then from there, we'll structure you a corporate system to apply. I know it's a cop-out answer, but
it's important to have the lawyers in at some point when the money comes in, when the big money comes in.
When only the money comes.
Yeah, when the money comes in.
Get lawyers involved.
Get
early.
a good lawyer.
Get lawyers involved early. There are a few options available. You don't need to go to an international firm in the IFC. You absolutely don't need to if you're a startup. I would actually advise against that because a lot of those advices land on my desk, and when I have a look, it's like, oh my goodness, what they're trying to structure for you? Is it a fund? How many people are we? Oh, we're two. You don't need a fund. So find a lawyer you trust, find a lawyer you like, find a lawyer you can talk to and be comfortable with, and trust their opinion. And of course, get lawyers involved as early as possible.
Bankers and lawyers, they are your friends. Jean-Luc, you had a point.
Now, since we're talking about financing of startups, I think we need to see also the development of the ICOs, because this is a trend growing really, really quickly globally. It has some challenges. Some markets allow it, some others not. I think Abu Dhabi Global Markets gave a kind of a positive note as long as it's not. So you just need to approach them to basically get validation that this is not a security, so that basically you can run it. But I think this is a complete new way of raising funds, which potentially can disrupt the VCs. There is going to be crowd. There's going to be different types of investors getting on board, but it requires a new type of setup to basically explain what you're doing, to market it, and so on. But I think that's going to be very interesting.
So the ICOs have raised more money than angel financing and seed financing, VC. So how do you feel about that? Your industry is being disrupted by a couple of coders writing smart contracts.
See, ICOs are definitely on the radar, but practically speaking, we haven't seen the execution in this part of the world. It's still a gray area for a lot of people for the lack of understanding. So I think if you see one or two successful execution of the ICO model here, you will see a very quick follow-up on that, because the ICO is a method to generate capital, but in itself, the fundamentals of why and how much the capital is being generated remain solid. So it's a mode of financing, but the evaluation remains exactly the same.
I'll just hold that thought. Craig, you had something to say as well?
I mean, ICOs are a mechanism, right? They're a mechanism.
Yes.
Just like blockchain. Blockchain is only a mechanism. Everybody talks about blockchain into trade finance. You need to sort out the regulatory and legal constructs when you move something from one country to another country to another country to another country. The fact that everybody can see it on a distributed ledger is just a technology enabler. Right? You've actually got to then sort out a whole bunch of other stuff. So it's good when everything moves. ICOs, some people will get horribly burnt with ICOs. Some people will really benefit from ICOs because it's got to have a utility. Right? At the moment, it's a great way about how you can move Bitcoin and realize it and bounce on to the next thing. So again, some of it will work, some of it won't. It's just an enabler. I think if you start to look at how do you make the tech scene, fintech, or the whole tech scene more vibrant, is you've got to reduce the cost of doing business for the start. If you want to 2 or 3 smart 20-year-olds to set something up, if they're in the UK, it's £100 for a limited company and they can work out of the bedroom.
Online in a day.
Right? Yes. Online, they're off. Yeah? Here, it's still a challenge because there are a number of overheads in terms of licensing, visas, etc., etc., etc. And it's that will actually stop a lot. Because if you want to create an ecosystem, think about it like a pyramid. You need lots and lots and lots and lots of people trying down here that make it up. Lots will fail. Lots will absolutely fail because their idea is not right, they can't execute, a whole bunch of things. But then they may fail at 2 or 3 times, and then the 4th one, they create that unicorn, right? Because they've learned the lessons. But they can't do that if they spend their life savings on their first and only one opportunity. Right?
Great point there. Ziad, if I can get you in on, you've raised $35 million. What do you use as your key conversation hook to tell an investor that you are one of the pyramid starters that's going to reach the top? Because that's what they're betting on.
Okay, first, let's agree that VCs are only in the US. Simply because there is only one Vegas, and it's in the US. So Americans, when they go to Vegas, they know that 99.9% they're going to lose their money. So they have the chance of 0.1% to win. Now, this is embedded in the culture itself. So VC is a nice word to a gambler. There is no difference. So real VCs are only in the US, and real money is only in the US. Here in the Middle East, I think you cannot go beyond $5 million, and that's it. That's the maximum you can do. Unless you are successful and you're generating a lot of money, and
the cash flow positive
exactly,
revenue.
They don't work in valuation in the way the American system does. Like, so many people don't know that Amazon started in 1994, and they did not make money until I think last year or the year before. So it took them almost more than 20 years to make $500 million, around that much. So it's just the valuation that was going up. So raising money, you can start here with seed funding a little. Even the seed funding nowadays, if you raise $500,000 as the seed funding, it's not really a lot of money, because
it doesn't take you far.
Yeah, in the early days, when in 2007, probably even earlier, $100,000 was a lot of money. But nowadays, probably $1 million is not enough to start. And as he said, the cost down at the bottom. Yeah, exactly. Yeah, exactly. 1 year salary. Not only that, one of the things that we face here, and it's a big problem in the whole region, is the stock option. There is no law for this. Where in the US, and I was telling my stories here to a couple of guys about the stock option, how does it work in the US. I worked with few guys who were my friends, and they exited, and later on I was paid, though there were no contract. It's just like stock options were given to me, vested over 2 or 3 years, and I was rewarded at the end of the day. Now these systems need to be in a place to be able to encourage VCs to come, but still, if you want to go for the big money, the big chunk, it's not here. It's only in the US. And Quisk was not my first company, Vivotech, and before that, I started a lot of companies. I failed. It didn't work. I failed. It didn't work. But most of the time, even from the 90s when I was there at the Bay Area, all the money was only in the US.
So that's a good thought. We are here in the region, and we have people like Walid and MR and Wamda, Beko doing some interesting work. It's fintech and tech investments in the region are just starting off, and hopefully there's much more to look forward. We've got some successful startups here who've raised money and executed real market solutions. With that, we close the panel, and I urge you to read a lot more about the companies that they do, and definitely get these K-Swiss shoes. They're really comfortable. Thank you.